your money belongs in your pocket, not the government. So let's keep it there, right?
Welcome back, investors. In the first half of this exciting interview, we got to meet Shauna Wekherlien, the tax goddess, and we were able to learn about amazing tax strategies that you can use to reduce your tax burden. The second half of this interview, we're going to go through some of the biggest mistakes that real estate investors make. We're going to go through some of the more arcane tax breaks that you can find in the tax code, including the master's exemption. Definitely want to listen to the end. And we're also going to hear about some great tips you can use to save more money when you get reimbursed for personal expenses. And as always, if you're interested in investing passively in real estate, enjoying the benefits of real estate without having to deal with the tenants, termites, and tantrums, head out to www.horizonmultifamily.com and you can schedule a meeting with yours truly. And with that, back to our regularly scheduled programming.
Welcome to the Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Another thing you mentioned was using your personal card.
Yes.
Question about that. And I understand there's a big difference between, for example, let's say you take a client out.
Yep.
You buy the dinner and you buy that on your LLC business card versus buying that on your personal card. So how does that impact the amount of tax savings that you're going to generate?
I love it. So and you know what? Good or bad, COVID helped and then didn't help, and it just made it all confusing. Okay, so depending on the time of year, let me go backwards. All right, there are technically 3 different categories of meals and entertainment here. Okay, and if it's for business, it should be on the business card. Period. Right. Let's start there. If you're out with a client, business. If you're out with a vendor, business. If you're out with your CPA, business. Okay, these are all business expenses. So definitely put them on your business card, business debit card, business credit card, whatever it is. Okay. Now, there are really 3 different categories of meals. And the reason why I'm bringing up COVID here is because there's a pre-COVID, during COVID, and post-COVID. Okay, the rules changed in all of these different periods. Okay, so the 3 main categories: 50%, which is typically schmoozing, right? So I've got a prospect, I'm trying to get them to become a client. Okay. You've got 100%, which is staff meals, vendor meals, meals with your CPA, people that are already a part of your team, right? And you're having a meal about business. Side note, spouses, if you have them on payroll, can qualify for the 100% deduction, okay? And then the third category is per diem. Now, for many real estate people, this is not really the choice that they go, but it depends on where your properties are. Some people have properties in Tennessee, Ohio, Idaho, I mean, like all over the country, right? If you are traveling more than you're at home, I would recommend that you look at per diem meals. Favorite example is, let's say you've got a property in Manhattan, you happen to snag your great grandma's apartment and you're triple leasing it, whatever you're doing, okay? If you're traveling to New York, even if you spend $7 on a slice of pizza, you can get a $65 deduction for it, even though you only spent $7. So if you're traveling a lot, I would talk to your CPA or, of course, a tax strategist about per diem meals. So the 2 most common we run into for most of our real estate people are the 50% and 100%. Okay. Now, as I mentioned, those rules changed post-COVID. Okay. So in COVID, there was a very specific, if you had any food that was custom made for you. So Starbucks is my favorite example. Okay. Right. Yeah. Because when you walk into Starbucks, what happens, right? You say, yeah, okay.
It's like if you have it your way, it's like Burger King or something.
It's like Burger King. I want the foam with the whip, with the 6 pumps, with the whatever, right? You can tell I'm clearly not a Starbucks girl, right? But this is custom made for you. Now, at the time of filming this, right, we still had that rule, the custom made rule in 2021 and 2022. So if you've not yet filed your 2022 tax return, and we should probably cover the benefits of filing after deadlines here in a minute. But if you have not yet filed your 2022 tax return, make sure that you're looking at the expenses, that you're looking at your meals expenses, because anything that was custom made, whether it was for you or for a client or whatever, is a 100% meal, 100%. So if you took a prospect out for lunch, okay, that normally that would have been 50, it's 100% if you went to a restaurant or whatever, someplace custom. Okay. Now post-COVID, excuse me, getting all worked up about meals and entertainment here. I'm so sorry, meals. Post-COVID 2023, okay, the 50% applies to business travel meals, office meetings, and supper money, which basically means employer convenience. So if you're keeping your assistant around late in the evening and you buy Starbucks for everybody, speaking of, it's 50% deduction. Okay. 100% meals are prospect meals. So the rules switched. It used to be 50-50, now it's 100%. So this is one of those things where if your CPA is face down doing tax returns all day, they don't have time to keep up with the rules. Okay. So your deductions, prospect meals, for a lot of us, we are taking out prospects. We're trying to get that person who's got that property that we want, like, come out to lunch with us. Let's make a deal. Let's do a thing, right? These are now 100%. Okay. So yeah, the meals and entertainment can be very tricky from that standpoint. So.
Yeah, good. Thank you for that. You did mention something about benefits of filing after the deadline. I didn't know there was any other way to file your taxes. It seems like ever since I've been getting K1s, that it's like September every year. It's the drop deadline. It's what my CPA, if she doesn't turn it out today, that we're all going to jail. That's when my tax return is done.
I love it. Well, first things first, unless you've done some really bad Al Capone kind of stuff, we're not going to jail. We'll talk about the aggression scale here as well. We're not going to jail. So don't worry about that. But no, so the IRS has publicly stated that they pull the audit pool from the people that file before March 15th for the business and April 15th for individuals. So we have a lot of people, and I'm thrilled, George, because this means that you are training your entire audience here. Extensions are good, okay? And we love extension. Two main reasons. One, gets you out of the audit pool. Period, plain and simple. You want, even if your return is done and it's perfect and it's ready to sign, just sit on it, file an extension and sit on it until like July, right? And then send it. Okay. So wait, always 100% of the time, always extend. Okay. The second reason you want to extend is when you work with a strategist. Okay. Sometimes, remember at the very beginning, I mentioned there were like 5, 6, 7 strategies that we can go backwards and get in a previous year. When you work with a strategist, let's say you just started working with a strategist now, middle of the year. Okay. When you work with a strategist, if you filed, the likelihood that we're going to tell you to amend is pretty low, because amending is like, hi, come look at me, I've got a thing going on, right? But if you haven't filed yet, we still have until September 15th to make any modifications or tweaks or changes. So we still have time to work on the file, right? So I'm a big fan of extensions, and we do it automatically for every client at Tax Goddess.
Yeah, awesome. Okay, you did mention the aggression scale. It sounds a little rough, but
no, my favorite. And I'm so sorry, because normally I start conversations with this, because this is, out of every question on our 500 question questionnaire, this is literally question number 1, because this is the most important question. So audience, I need you thinking in your minds, okay, what is it for me? Okay, because this is all about you as the taxpayer. Okay, so 0 to 10, this is all about tax strategies. 0 to 10. 0 meaning the IRS will never call me, never ever, but I'm leaving money on the table. That's that, right? And I'm making a choice. I'm making a conscious choice to be there. That's fine. 10 meaning we're all going to jail. That's what triggered me when you talked about extensions, right? We're all going to jail. Now, I always like to say, listen, I'm a redhead. Okay, red and orange do not look good together. No, okay. I'm a level 8 by both training and by nature. Okay, so let me walk.
You don't seem that aggressive. You seem very nice.
Oh, you're so sweet.
You're just aggressive when it comes to tax strategies.
Strategies, absolutely. Well, and honestly, your money belongs in your pocket, not the government. So let's keep it there, right? So I always like to work backwards from a 10. Okay, 10 is where I'll go to jail. Okay, now I have had people tell me I'm going to a 20 and then I'm going to move to Belize. I'm like, great, I'm not your CPA. Like, you seem very nice, but it's not happening. We're not doing it. Okay, so you drag them back. Okay, a 9 is you're doing shady stuff. You're basically being Al Capone. You're doing stuff you know you're not supposed to do, right? And you're hoping they don't catch you. And that's exactly what happened to Al Capone, right? The whole reason they caught Al Capone was because he didn't file his taxes properly. There you go. Okay, so don't do shady stuff. No level 9s. A level 8 means the IRS might call you, okay, but all the T's are crossed, all the I's are dotted. You have all the backup, all the documentation. Here's the 300 pages of court cases that tell you exactly why we're doing what we're doing, okay? So yeah, normally I go to an 8. Now, some people, and this is why I say it's so important for you to understand this, okay? Let's say, well, George, do you mind if I ask you, where would you be on that aggression scale?
So I want to say I'm more like 5. I don't want to end up sniffing glue in Alcatraz like Al Capone. That's not how I want things to be.
We're
But
not doing it.
definitely I want somebody who's out there and who's going to apply for what makes sense, right?
Love it. Love it. Okay, so middle of the ground. So let's talk about this, right? If you and I decided to work together as clients, George, right? You say you're a 5, I'm an 8. Now, George, are you married?
I am.
You are. And what do you think your wife would be?
Oh gosh, I'm gonna say maybe 3 or 4. I don't know that she's necessarily very aggressive. We don't talk a whole lot about this. Just like, George, get this done.
Okay, well, good. So
Get the taxes done. Here's some stuff. Here's some more
Make it
stuff to
happen.
send to the CPA.
And we do that a lot, where one spouse kind of runs the show for taxes and the other one's
Sure.
just like, whatever, I'm staying in the background. So just for purposes of example, so thank you for letting me question you here, George. So if she's
Sure.
a 3 and you're a 5 and I'm an 8, okay. So we will ask her, do you feel comfortable coming up to a 4, right? So that we're kind of in between the two of you, right? We've got to come up with somewhere, where is the family going to sit? Because we can't apply strategies just to you, right? I mean, you're a family unit, right? So it's going to apply to the family. So let's say we go with a 4. As our team is looking through the 400 plus federal strategies, right? And then of course, all the state and local stuff, we are looking for, okay, well, that's a level 7 out. This one's a level 8 out. This one's a level 2, we're good. This one's a 3, we're good. This one's a 4, we're good. Okay. So as we start to build a tax plan, a strategic tax coaching plan for somebody, that aggression scale question is the most important question. And the reason why I bring this up to all of the audience to listen to, okay, let's say, dear audience, you are deciding in your head, you know what, I'm an 8, or I'm a 6, or I'm a 3, whatever it is. Okay. The next question I want you to put in your head, if I asked you the same question about your current CPA, what level are they? So if you're
Like -5 or 6?
exactly, we hear it all the time. The average -2, -3, I don't know. Like, they don't do anything. If you're a 4, you and your family are a 4, okay, and your CPA is -2, they can't even bring you strategies because they've already filtered them out of their mind before even talking to you. And if they never asked you where you are in that scale, they're giving you the strategies they give at their level. So it's probably one of the most important questions. If you take nothing else away from today, it's probably the most important question is to ask your financial team, where do you sit? 0 to 10, right? We all going to jail, or like -3, where are we at? So.
And what I love about that is that, look, all of these strategies, they're all in the tax code somewhere.
Oh, yes.
But the thing to remember is that there are, I would say, differing levels of attention paid to these strategies by the IRS. So one example would be that real estate professional status, your dentist, your doctor, who says, yeah, and by the way, I have, at least 1,500 hours a year that I'm working in real estate.
On
That's more
one
than
rental
half.
property. Yeah,
Yeah,
right.
exactly. And I've got one rental property. It's a duplex, and I'm spending 750 hours or whatever. It's at least 750, but it's also got to be more than half of the time. So you couldn't be spending more than 1,500 hours as a doctor then, right?
Yeah.
So that's one of the ones that I think has been attacked really hard. But that's why we need people like you, because look, I may understand the tax code to some degree, but I'm not out there looking for the dirty dozen that the IRS is out to get, Or I have a friend who talks about the concept of a tax turkey, right? Until, every day that turkey gets fed, it thinks, hey, these humans are nice. I get fatter every day. I'm in no danger. I'm less nervous every day, but it's Thanksgiving. That's the day
It's
that the
coming.
turkey finds out why it's been fed.
Yeah.
And the same thing with these, it's just before the IRS decides to come down on something, that's when it's most dangerous. So what are some things that you would avoid?
Ooh,
these days?
I mean, the
Or
instant
at least
that
maybe,
this one
you want to be very careful about. Obviously, you have
Yeah.
documentation, right? It's all in the tax code.
Oh,
If you
yeah.
have proper documentation, that's good. But what are some things that maybe the IRS is shining a light on these days?
Absolutely. Well, I mean, you hit the nail on the head, and it's a perfect example. There's two I want to cover. So the Dirty Dozen list. Okay. Every year the IRS publishes the Dirty Dozen list. Now, what I tell clients, because earlier I talked about the 831B, right? That's a captive insurance company. When you look at the Dirty Dozen list, it's on the Dirty Dozen list. It's there. Okay. So what I make sure to all of the audience, okay, there's a good version and there's a bad version to every strategy, every single one of them. Okay. So generally, big picture, good versions will mitigate some sort of actual risk. Okay. So I'm going to stick on the captive here for a second, then we're going to switch to conservation easements, which is one of the other big ones. Okay. So captive side, 831B, COVID. We have a client caters to all the Major League Baseball teams. He purchased all of his food February of 2020. And then guess what happened? $600,000 worth of food spoilage. Right. So he went to his insurance company, State Farm Farmers, whoever it was, and said, pay me. This is exactly why I've been paying you premiums for the 35 years he's been in business. They came back and said, act of God, no. $600,000 just gone. Nothing he could do about it. He had a captive insurance company. He went to his captive company and said, pay me. And they went, yep, you're covered for act of God. Here's a $600,000 check.
Yep.
Okay. Yeah. So that is clearly a valid risk. It's a real thing. He had real loss, right? He got paid out, a real thing. I'm getting goosebumps even talking about it. It is a real risk. The case that the IRS went after, one of the famous cases, cattle rancher, 5,000 head of cattle on top of a mesa, like basically on top of a mountain, a flat mountain. Okay. All of his cattle were on top of the mountain. He created a captive insurance company for flood. They're like, well, this would have to be a biblical flood for those cattle to be in a flood. Like, it's just not happening. Okay. So that is a bad case because the risk is not valid, right? There's no way you're going to get a flood on top of a mountain. It's just not going to happen. Okay. So conservation easements are very similar. Okay. What we see a lot is somebody, a promoter, they're called promoters. Okay. A promoter coming to you saying, okay, give me a $100,000 investment. And in a year, I will give you a $500,000 either payback or tax deduction. Okay. The IRS doesn't like that. If I give you $100,000, maybe your return on investment is that high, but not over and over and over and over. It's clearly your promotion, right? There's clearly something going on. Now, in a conservation easement, in the good version of conservation easement, let's say you buy a house, and this happens pretty frequently, actually. You buy a house and it's sitting on an acre of land. It happens to be on the side of a preserve or a mountain or a hill or wherever it is. Okay. You can actually donate. Now, this is you guys as flippers, builders, all the rest of it. Okay. You can actually donate the back half of the property to a conservation easement. You can get a deduction, a charitable deduction for that. Okay. And then when you sell the property, you get the donation and you sold the property, and especially if you've remodeled it, you've recaptured all of your money anyway. Okay. So especially in the real estate side, using proper conservation easements is a fantastic way to get some extra deductions out of land that you would have already sold. It's not your land, like it's land you would have sold anyway. Okay. Those kind of conservation easements are just fine. So really, when you're looking at these tax strategies, the way I always tell people is, listen, if it's too good to be true, they better have proof. Okay. So you look at somebody like us, right? When I come to you, George, and I say, listen, I can reduce your taxes by $300,000 a year. Sounds too good to be true. How did my CPA miss $300,000 or even $10,000 or $50,000, whatever that number is? Okay. So you look at the proof. Tax Goddess has written 4,700 plans. We've only had 2 of them that ever were audited, both level 8, and both came back at no change, meaning the IRS approved of everything we did. So look at the statistics of the people you're working with, right? And
That's awesome. What?
sorry, one last thing that's very important. If you're looking at a strategy, I want you guys to ask for something called a PLR. PLR stands for private letter ruling. If the strategy has an approved PLR, that comes from the IRS. That means the IRS has stamped approval. Like, yep, we're good. This works, right? Stamped approval on that strategy. So if they have a PLR, you're probably pretty safe.
It's like a no action letter,
Yep.
something like that. Okay.
The
good.
IRS
So that's
has reviewed the facts and said, as long as you follow this fact pattern, so if they change it, be warned, right? But as long as you follow this fact pattern, you're good and we approve. So
that's something our audience might be very familiar with. A lot of people who are interested in SEC law here.
Yep.
But
Okay.
okay, that's perfect, because I wanted to ask you about that. My last question for you was going to be, do you provide audit defense to your clients?
Yes. Yep, absolutely. Yeah. So if we gave you the strategy and we told you what to do with it, as long as you follow the instructions, absolutely. So yeah.
All right, perfect. That's why you never go above an 8.
Right.
Right, awesome. Well, with that, I would love to enter the rapid fire round. Are you ready, Shauna?
Yes, sir.
All right, so I would like to ask you, if you could be known for only one thing, what would it be?
The instant answer is the flaming red hair, but I think it's the tax. I want to help people save money. I want to keep the money in your pocket. That's super important to me. So education is huge for me. So
I love it. My wife's going to love that answer. I think she'd have a very similar answer. Hey, what's the greatest lesson in leadership you've learned as an entrepreneur?
there's 2 of them: do or do not. There is no try. Master Yoda, of course. And my favorite from an old coach of mine, Fred Croyne: hope is not a strategy.
Personal characteristic has been most pivotal to your success?
Charisma. Most CPAs don't have a personality. So
All right, I'll second that.
and we love you, CPAs. We love you.
I love CPAs too. I love lawyers. Whoever gets me out of trouble keeps me out of trouble.
Yes.
But yeah, definitely 100%. Okay, great. So let's take a nod to the randomness of the universe. I got my random question card. Just tell me when to quit cutting the deck.
Stop.
All right. If you could give all human beings one virtue, what would you choose?
Honesty.
Name a book that's helped to forge you as a leader and as an entrepreneur, and why?
The 4-Hour Work Week. The original print version had a footnote that talked about automating your calendar process. So we started that about 20 years ago, and it's an absolute life changer.
What's the biggest hurdle you've overcome in your business in the last year, and what did it teach you?
Creating a management team. Our team at Tax Goddess is now 89 people. And so changing from a single owner with my team to me with a management structure with our team, and learning how to really motivate and grow and train staff is a huge new lesson.
Great. And can you send us out with a quote to help forge our listeners as leaders and entrepreneurs?
Oh, my brain keeps going back to do or do not every time.
Yeah, Yoda's great. We can roll with Yoda.
Can we roll with Yoda? Okay, because it really is, right? If you're thinking it and you don't do it, it didn't exist. So do or do not, my friends, do or do not.
All right. Yeah, I mean, it's hard to make it to 880 years without getting some significant wisdom. So yeah, Yoda is great. I'd love to have the wisdom of Yoda before I look 800 years old. But yeah, he's great. Very, very quotable. The last thing I want to do is make sure that people know how to reach out to Shauna Wekherlien, the Tax Goddess.
We are super easy to find, taxgoddess.com. We're on YouTube, Instagram, Twitter, TikTok, all the things. But I would say YouTube because we have tons of knowledge on there. And of course, as I said, we'll be launching the new 6% Life group. So super excited. Just find us on taxgoddess.com.
All right, wonderful. Thank you so much for taking the time to share your knowledge and experience with our audience.
Thank you so much for having me.